What's going on, guys? Now I got to figure out how to hide this thing. There we go. Perfect. Happy Saturday. Happy Beer 30, everybody. We are rocking out the couch as always. So welcome back to another edition of Me on the Couch with you guys. Beer 30 and this week's koozie from Ho Ranch to the Sluts. This is actually a metal band that I saw in Lawrence, Kansas after softball this last week. So shout out to anyone that knows who these guys are. They did some good cover work and also had some albums. Didn't buy any albums, but did get a koozie. Man, we're glitching out. I have the lights off in here, so it's probably hard to hear. Been outside all day, tried to get a good workout in. So if I'm a little sweaty, you can hear the fans going, and that's why we're rushing today. Also, boomer moment. I forgot that I sunburn easy because I'm pretty white, and I was out in the sun today. And yeah, guys, wearing a backwards hat will leave you with a little mark here. So tomorrow, when I mow the lawn, it will be hat free. We have to even that out. We can't just have a stamp on our forehead. So, yeah, dumb move by me. That said, let's go ahead and get into the charts. Let's look at Bitcoin. This will be somewhat of a quick one today, and there's nothing wrong with that. Sometimes you got to go kind of quick. Put out some stuff on YouTube, and I really feel like it was beneficial for the masses because how you could have found 73K as the high was fairly simple. But yeah, when is queer 30 according to Matt? Well, Matt, I feel like you're just living that all the time. I mean, I've heard that it's a lifestyle, so you tell me, brother. Anyways, thank you guys for being here on Saturday. And if you're watching this back, I actually don't know, what to tell you guys other than soak it in. We are going to look at things through the lens of basic charting from 0 to 60, meaning that we're going to go from nothing to a full breakdown of the chart. Generally, we like to do this stuff, especially if we can do it at least once a week for the public. We do it, I don't know how many times a week for the group, but it's really just to get you guys used to charting and then also setting you up for success in an educational manner. So, in the members group, we obviously do this. I don't know. I think I try to get 2 live streams in the mornings and do some live trading if possible. We're using Blowfin. That's the newest exchange. So far, so good. I don't know if anyone else in the group wants to give any feedback on it. Still working on some, fee discounts. But we may get rid of this couch because it keeps blinking. I don't like that look. So let's go ahead and get rid of the digital background if we can. We're just super dark. So that's totally fine by me. I don't care if this is not visible. We'll turn on the on-air sign or something. There you go. All right, guys, let's dive into the chart. We've obviously got some levels up here. We're going to go ahead and get rid of those and kind of work this one backwards. I think that's a fair thing to do, and rightfully so, as it never hurts to take a completely new look at a chart, even though you've already charted it, get everything off of there and revisit, so to speak. I am labeling a few things just because I want to keep my object tree somewhat clean, because after this I will need to clean it up. But okay, I don't know why that's labeled a level, not an SFP, but regardless, we start deleting things from here. This weekly level can go, 2021 high can go, previous week high can go, and then so can the weekly open and previous week low. Those were pretty key levels if there was going to be a pump. Obviously, there was not a pump, so just one of those things where, all right, so here we are on the chart, and taking a look at things. We do have some stuff beneath us, like the 2022 high, etc. 2023 high is just above it, I believe, but I'm really not too concerned with getting those off the chart. If we go to like a monthly time frame, what we need to start taking a look at is where are we at locally. And first and foremost, I would say you need to take a look at the quarterly as it's ending, maybe the 6 month. The 6 month is ending, and so straight away on the 6 month chart, you notice that you have the SFP, right? So we do have a 6-month SFP, and that to me is the highest time frame that does end at the end of June, here in a day or two, Sunday, which is going to be the what's the correct word for that? Oh, is it biannual range, the quarterly range, the bi-monthly range, the monthly range, and the weekly all end on the same day. So big day in terms of just getting new levels. We have many new pivots to work off of, and kind of just saying, hey, we could, if we could have lived above 65K, which we've been talking about for several weeks, things start to look good. Looking at supports down here, you can see that you really don't have anything on this chart until you're back at like 48K. So just something to bear in mind on the high time frames. Now, those generally take longer to play out, so it doesn't mean that that's going to be the end-all be-all. Now, we do have the 6-month SFP. You are also going to be working off of the prior all-time high here, and so we already had that level on the chart. I really don't want to list it again. I believe I had it underneath the highs and lows folder. I believe it was in here. That's the all-time high. Where's the 2021 high? Did we lose it? It appears that we did, which is no bueno to me because I don't want to just have random levels on the chart, but it appears we're going to for now. Nonetheless, we're going to mark it. So 2021 high, very important on the quarterly level, mainly because you did try to close above it and now you've closed back below. Had this gotten bought up and closed above 69K on a quarterly basis, things would have looked okay. And things would have looked okay if you could have at least stayed above 65K, which it's obviously not the end of the world, but it is something to start taking into consideration when you start looking at things through the lens of a macro chart, right? So 2021 cycle high, that's probably the best way to label that. And these are things that you're going to make this chart maybe once in a while, maybe once a week if you need to. I do it because obviously we get new viewers and it's good for you guys to see this stuff, in my opinion. And that's, not to be conceited at all. It's just one of those things where, very few people take the time and go through these charts in detail with, people unless they're being paid money. And, that does need to change. Obviously, we do a paid side of things because it does take time and effort to do that. But at the same time, we try not to ever gatekeep, and we come in and we put forth more than anyone else is in terms of, free information to you guys. So appreciate you guys being here. Smash the like, all that shit. You know what I mean? The fucking YouTube spiel or whatever. Monthly chart. Okay, so we're on the monthly chart. Where do we go from here? We've obviously got a 6-month and essentially a, all-time high marked. Not much really going on. What you could do is probably mark out a monthly horizontal level here. You can see that more than likely this is not going to resolve above it. And all that's telling you is at 67,500, which was also a bi-weekly area. Above this level, things, can challenge into the all-time highs, but below it, not good. People are getting trapped here off of the all-time high into lower highs. Okay, so not an ideal world. So above 67,500, good. Above 65K, good. But it depends on the time frame we're operating within. On a monthly basis, you would probably want to see 67,500. If it's a higher time frame like the 6-month, yeah, 65K is kind of the level. So the next level you're going to mark is the March low right here. So you can see the March low is fairly important. I obviously have a color scheme that I like to label these at, but I like to label my lows in a solid white, the SFPs in a dotted white, and then horizontal levels in orange. Solid orange, rarely do I do anything outside of that. And then opens are blue. Okay, so if that helps. Being red-green colorblind, those are kind of the safe colors for me. So looking at the March low, you can see that this has been a level that has been well respected. Anything below here has been, realistically a good opportunity. So, we are range bound until we're not. But at the moment we start closing below about 59K, 60K would probably be another, easy level spot if you want to do it like that. You could probably make it a zone. You could do something like this if you wanted to. You could box it off and say that, below here, not good things are happening, right? Not good things are happening. So that is going to be probably the areas on the monthly that I'm most interested in. And then after that, there are no monthly areas of interest until much, much lower on this chart. So when we zoom out one more time to see where is support, you can see even on the quarterly, unless we're just going off the quarterly high here, which is the, 2023 high, which I know is marked in the highs and lows folder. We just saw it right there. There's not much to say that that's going to be support. And you have the 2022 open here. The yearly pivot comes in here. So, there is kind of a zone that could start to be met between, 44,769 and 48,207 should price break down from here. But until that happens, there's really no point in getting too bearish as long as you're above that March low at 59,000. That's the area you want to be looking at in terms of buys. From a traditional charting standpoint, if you were going off of the levels that we work off of in the group, where you would want to be looking at opportunities would be more so along the lines of deviations. So these are levels that were given for the entire year right here. So these are the levels that we've been working off of since price came into January 1st. Very good levels. Calling the highs and lows pretty good, right? You could also work off the halving data. This would be the halving data, also pointing to support down here in this like wick area. But realistically, if you start losing this region of the chart, probably not looking too great. I think you pretty much teleport to the 2022 and 2023 high area personally, but that is getting ahead of ourselves. So we're on the bi-weekly chart now. So we've gone down from the 6-month chart to the quarterly chart to the monthly chart. Now we're on the 2-week chart. If you were to take a look at things just from the lens of the 2-week, you can see we had a bi-weekly level here at 64K that did provide a little bit of a bounce, but realistically turned into nothing. You have another bi-weekly that will show up here near that monthly. So that is something to keep in mind. You could keep that on your chart if you wanted to, and you could pair these up and make a note and say, hey, if we get back to 67,500, there is decent confluence there for a trade potentially. And I believe that is also going to be that if we were working off of, because that is the high, isn't it? 72,086. Yep. That's your gold pocket as of today, if this is the low, right? So, that would be an area to keep in mind is basically, let's put that gold pocket back on. For those at home, it would be here. Okay. So you can see the gold pocket between 66,768.50 and 67,214. I would give that a little bit of an extension, basically $1,000 zone, about 1.5% between 66,768.50 and 67,758.50. So actually that's $990 exactly. So $990, bit of a zone, but at that point, that's the realistic, area on the chart. So we're going to get rid of that, and let's see if there's anything else we can get off the chart. So straight away, you can see this area right here. So I have this marked as a weekly SFP. We're going to change that to a bi-weekly. So we're going to put a 2 in front of it to let us know it's a 2-week SFP, because on a bi-weekly closure basis, which is, people always ask, well, I need to see a certain kind of closure. I'm like, generally no, but in this case, you have a bi-weekly closure. You've not closed below this on a 2-week basis in quite some time, and you're coming into the bi-weekly close this week, just so you guys are aware. So if you start closing below even 60,777, you really want to see that level reclaimed and a move up start to take place. Because if you don't see that and price starts turning this area into resistance, I think it's a quick drop. I would favor a long out of this region. I certainly wouldn't be looking for shorts right here. It's not a good idea. It's support. I did trade this area long, so I just. When I made the comment, I traded it long on Sin City this last week. I said, I would just identify an area to take profit. And I said, at a minimum, you'd probably use something like the VWAP. But realistically, if you're not taking profits by 64, 65K, which we came nowhere near, you're in for a bad time, or you need to have a stop loss, because you could certainly get stopped out of this trade. So, there are no guarantees in this market in that regard. The only other biweekly SFP you really need to take a look at is here. Right. And this is me kind of just like autistically talking at you guys. And I do understand that, but that's just kind of how today's going to go. Some days are different than others. The more beer we have, which you guys know, I do a poor job of drinking my beer. The less the stream tends to be like that, but it doesn't really matter. But yeah, we are having Yingling traditional lager. So if I get through this beer by the end of the stream, I would be amazed. But at 70,447, you can see you haven't closed above this level on a biweekly level since reaching it. So another good level to have on the chart. And then you cruise down to like your weekly chart, of course. And what you'll notice on the weekly chart is that weekly SFP level for me is right here at the March low. So that March low getting double the action, really showing you that, on an early sign, losing 67 or 60,777 down to, and this is not rocket science here. This is like, oh, well, no shit magic. But if you lose this area of support, you're just looking down. You're looking way down too. Like, I don't think you're looking to 50K or 52. I think you're looking to 48, maybe even 44,000 at that time. So for me, this is an area to be looking for reasons to be long. And if this range can continue, you just don't want to see it put in a lower high. If it does, you're probably looking at some form of a descending triangle almost. And I've said this before that, shades of 2014 is what you're looking at. It's not perfect. This one was pretty damn clean, but it's a nice descending triangle. You can see there's wicks below, but realistically, you can see the formation. So we really don't want to see a lower high get put in place on this bounce. We want to see this bounce get continuation, and that has to get above that 6-month SFP at 64,990. That's going to be a key area. And then you can take place and say, okay, is this less like that 14K top and more like a wedge scenario where price is probably going to chop around and get somewhat boring? And when you take a look at this, you can see that's where your point of control is, up here above that 65K level as well. So above 65K though, things, start to look good. We've talked about that before, but the reason that's relevant is when we go down to something like this, you want to see that sideways action here. It would be very reminiscent of the halving as it usually is. Your last halving was back here in May, and these cycles don't have to be the same, but you've got a really, really similar idea where price just went sideways for a long time, really bored everyone out of the market. And I'm pretty sure I drew this way wrong. It'd be more like this, really bored everyone out of the market all the way to the last second before breaking up. And this came in April and did not leave until July. And we've talked about the Fibonacci time last week. That's coming in the third week of July for this asset. So the best thing for Bitcoin to do is to hold on to this region of the chart and continue to go sideways, remain range bound, so to speak. And I know that's a very boring thing to say, but it truly is. But if you start losing this area, it's not the end of the world. You just got to zoom out and understand where your next trade is probably going to be at. And I say probably because we don't have a crystal ball. We can't sit here and say that we know this is the next area. But more than likely, this is probably going to be, and I know I have this, there we go, probably going to be your region. You have the 2022 high right here, right? The 2023 high is actually all the way down here. You could extend this down if you wanted to, and you probably should. More of a zone than anything. I would be looking at this area on the chart and go to the daily now, and you take a look. This is probably where you're looking to trade out of. And when you take it and you project it right out here, you can see that this has been a big, big area of support and resistance for this asset for multiple years. Here, again, right here, what happens when you're below it? Nuke. What happens when you get above it? We go to 60K. Right? I mean, it's been that simple. Even right here, got up to it. It was resistance. Finally gets turned into support, goes to 60K, comes back, support. What happens when it gets flipped to resistance? Pound town. Resistance above it. What do we do? 60K, all-time highs. So should we lose this region of the chart, it stands to make sense that we're probably coming back to that region. And that's going to be our next opportunity at a good, if we're looking for a long trade. But the best opportunity for a long trade is kind of already here. The only issue that I have with it is, and I've seen this a lot, people are saying we're, oversold, and they are correct. But again, I've mentioned this before, you really need to, and I want to say it was last week even, we went over this specific scenario. Just because you're oversold doesn't mean the initial bounce is going to get, that type of a move. Now, this happened fairly quickly, but when you look, you're going off the closures, you have the lower lows, you finally put in the higher highs, you have very clear bullish divergence, but it did fade that first pump and wipe people out taking these lows before the move up, right? Had to get people down here to turn into fuel. Had to take that as the meme of the space, is you had to have that liquidity. It always cracks me up. But we talked about last week that this probably isn't just going to V-shape reverse out of here, that you're probably going to grind this area out, if anything. And that's not a bad thing. You don't want to see this, breaking down, of course, but if it grinds this area out, it's not a terrible thing. It actually is going to present us with ideally some kind of a trade setup, whether it's an SFP, whatever it may be, harmonic, all that stuff. Now, again, you just don't want to see a lower high get put in here and then a rejection and come back down. That to me would look more bearish than anything. So the better trade right now is obviously the long. Does that mean that long is going to turn into fresh new all-time highs? It can above 65K, especially above 67.5. I think that's a really, really obvious level that if reached, it's the gold pocket, point of control, all that stuff of the range. But I think above 65, you really start having that conversation of, maybe this was a higher low and this is consolidation underneath prior all-time high resistance and Fibonacci resistance from the long term. And if you're curious about the Fibonacci resistance from the long term, there's a whole thread on my Twitter. Go look at it. It was something I put out in February before we even got up to these levels. And I said, hey, just so we're all aware, 73K, it's the motherfucker level. And if we don't get above it, we can't have these 100K valuations. We have to be above 73K. That was always the thing. So it's actually an old target from the 2021 cycle that just, came up a little short. Not the end of the world, though. So, yeah, I mean, the levels are very, very obvious. We could go a step further if we wanted to. We could get into like the hourly and we could start really taking a look and dialing into, where are my future pivots coming in at? Like, where is my bi-weekly, monthly, bi-monthly, quarterly, bi-quarterly. So you can see that the bi-quarterly is right here, meaning the 6-month pivot is generating basically at our low. So if we took this low, support will be here. It's just a matter of will that support hold. And then you have averages both on the bi-weekly. Okay, so right here, the 2-week average. This is going to be like probably your monthly average if I had to guess. No, this is your bi-monthly, quarterly, and then regular monthly there. So all the averages from the time frames that really matter, 2-week all the way up to 6-month, are all kind of wedged into this zone that we're in now, with the 6-month average, the high time frame average really trying to operate as support. And then these local medium time frames, which I don't think they're medium, I think they're high time frame, quarterly, bi-monthly, monthly. Those are all high time frames. But, they're also things that inside of a trend can, flip quicker, obviously, than like a yearly, can. So like when we go to the 4-month or the monthly trend, for instance, in this case, you can see that these are the monthly averages as they come in as pivots. But what do you notice? They're higher lows with price. Okay, so what you don't want to see is our future pivots coming in right here. See how we're making a lower pivot. If this gets flipped into resistance, you flipped the average from May and the average from June into resistance, and you've generated a lower low in averages, meaning that, should this area break down, you are correct. You're probably going to start averaging to the downside. And, it's a monthly time frame, so it won't be overnight, but you'd be looking for lower prices after that, and potentially looking at this as the top may be in. And we've talked about that a little bit, that if this was a cycle where there was an early top, this would be the area and time frame to do it. I'm not willing to say that's the case. I'll tell you guys, I don't know if this is the top. I think that my gut says it very well could be. But the thing is since you don't know, it's really all how you react up here. And so what I do in my trading, and we've mentioned this before, is, my leverage trade started at 16.6, if you guys recall, and it's on my Twitter in my highlights section. I make sure to keep all that stuff relevant and pinned for you guys. We started calling for about $28,000 or 27,000, and said, if it gets above 30 though, you could see 49 and maybe even all-time highs again. So instead of selling Bitcoin here, what I do is I trade inverse perpetual. So you just close some of that perpetual long, and when you close it, it closes back into Bitcoin. So you just get the native asset. So those profits you've booked come back to you in Bitcoin, and then you still have exposure for the upside. And so if I'm wrong about this being the top, all I've done is deleveraged and de-risked above all-time highs. And, I'm still holding the asset, and I still stand to gain from any kind of upside, behavior, but I'm also not having a huge drawdown by holding, leveraged positions into the highs and then waiting until back down in this region to get out. When in reality, you've just been holding a long, leveraged long at that, probably paying funding, which I know I am because shorts generally pay a little better over long term, but you're paying funding the whole time having it. So it doesn't make sense to keep the entire position open and stay risk on that in that manner. You want to make sure that you are de-risking as the market becomes more risky, because down here, not very risky. Up here, there's a little more risk involved. I'm not saying it's a bad buy. I'm just saying it's a little more risk. So, be smart with leverage. That's all I'll say is, those exchanges are fun and they're kind of like a casino, but in reality, you can really position yourself well if you can just manage that greed a little bit. Yeah. Let's see. There's 17 of you in here, so I haven't seen. What's up, Alex O? If you guys aren't following that dude, give him a follow. Yeah, bi-monthly a little bit. That's kind of the meme. I know Crypto Crew University is kind of all about that shit. T-bone steak and water, my man. That's good stuff. But I always say, guys, it is the weekend, and anyone that has kids or family, or even if you don't, make sure that you're spending time with those guys too. I do appreciate you guys being here, but if you do anything for me this week, spend a little time with real people. I think that, that gets thrown to the wayside in crypto a little bit. It's fun to get online and do all that shit, but make sure that we're hanging out with the real ones. But timing, and we cover this every week, and I'm going to continue to cover it. Macro timing, where we came in at on this was right here. We were working off of our macro bottom on log. We need to get out of log. And it's a cipher, which I don't like. We can certainly project for the cipher here. Very, very well respected. Just didn't quite reach the 1-to-1. But you did do a few other things. You can see you've reached the EQ of your trend. So what that means is if you were to turn this pattern into a projection using a pitchfork, which is just a Fibonacci tool, you've reached a pretty big inflection point, which is what I always call the EQ. And it's that 50% mark right here in the middle. There is a book, what was it called? I want to say it's Pitchforks in Fibonacci Symmetry, and it's a book I think that George McLean co-authored. I need to post it in the group because I noticed it wasn't in there the other day, but very good book, talks a lot about the 50% mark, very important. But that is what got you there. And then if you were to take the total length of this pattern, right? So from X to D, you've got the 50% mark here. If you were to do your macro time on it from the overall low, that's not right. Where is it here? Yeah, it is. Okay. If you were to take this one, you can see that this is the cycle low at 3K, 269K to the 15K low. Instead of using X, we're now using this pivot. It is also the 50% mark. You had multiple 50% marks right here at really, 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 really key Fibonacci resistance. So could this be the end of the rally? Sure. Anything can happen. I don't think we should jump to that conclusion, but what I do think people should do is maybe heed a little bit of caution and try to trade intuitively and put themselves in a position with the least amount of risk. Just because I just think it's a good idea in these circumstances. But that doesn't mean sell your crypto. If you're not leveraged, then as long as you're not, all your crypto holdings aren't spot buys up here, you're probably okay. You're probably in profit. So, it's not the worst thing in the world. I'm just saying maybe consider, taking some of that risk out of the market at some point and paying yourself. But if you have a time horizon of 5+ years or whatever it may be, and these are investments, it's a different story, And I'll tell you guys, like I tell everyone, 80% of my capital is investment capital. So, I don't trade all of my money. And I've been saying that for years and imploring people to not trade all of their assets, just sit on it, buy when it's a good time, add to it, and let it grow and work for you. And then you can have fun with the other, 20 or 15% or whatever you want to trade with. That's fine. Everyone's going to have different risk tolerances in that case. But so we're at a really important time in the market. And if we were going to see a reversal, and we kind of talked about this, it would probably come, I believe it would be in July here, right here. We'd be looking at the gold pocket. Where did that go? X to D, there it is. We'd be looking at the 618. So if price can remain range bound here, go sideways long enough, we could potentially see, into the third week of July, what we were just talking about. You could see something where it is turning into that, higher low fashion, or however you want to look at it. You could be looking at a giant triangle, which would be more than ideal. But if this turns into a descending triangle, it's not going to look good. It's not going to look good at all. I will tell you that it will start looking kind of bad, actually. So keep that in mind. I think the only other way you could look at this outside of a wedge is to be looking at it through the lens of like a fib channel. And we did this in the group, I believe, something like this. I think that, I think it was actually, I think we still have it on here somewhere. I feel like I have it right. Yeah, that's right. So we used the first two highs and then this low, and it gave us the exact low, and you can see it came back up to it. So if you were to trade this as like a channel, this is how I would do it. I just separate it as a Fibonacci structure, point A, point B, point C, and then using the quarter, 50%, 75%, which is essentially the quarter percent, or the EQ of the bottom, EQ of the top. And from here, you've got really, really, really solid levels. And I mean, like, we're talking, you don't really got to do much else in terms of TA if you don't want to. You're just adding, gravy to your current analysis, right? So tool usage will be indicators every day of the week. If you want my personal opinion, indicators aren't bad. It's just, I think if you can properly learn how to use these tools, you can really give yourself a leg up and simplify your charts. You could literally have just traded this entire structure from the low all the way to the high, longed it again, back to the high, longed it again, back to the high, deviation, back test the high of the range to the low, back test again, and then before finally essentially SR flipping it all the way down to the next levels. And that's where our resistance is now. So, that's all I would offer you is, if you guys are unfamiliar with Fibonacci tools, channels, pitchforks, all that stuff, I probably should put out some more content on that so you guys can learn how to use those. But there are a lot of books out there where you guys can pick this stuff up at, and plus you get a little practice. And it's all about having a system, kind of like this is all system based here. So this is something you want. So this is actually something that I developed myself, a little different. And this isn't to like brag. It's just I'm trying to fill out some time here before jumping off. And you guys are kind enough to be here on a Saturday, so I'm gonna show a little bit. So I use like pretty high time frame data. So that thread that's on Twitter is based on halving data, and it's all based on projected halving data from, as you can see, when the halving started, this May area all the way to here. And we were looking in log and linear, and it was giving us kind of the same target at 73K, and that this was the halving date. And we obviously have the 50% marks that were coming in here, the EQ of that channel. It was also massive fib area. It was the logarithmic gold pocket from prior cycles. It had negative Fibonacci there. It had all kinds of things. It was just a really, really big area to be aware of, over here even, and it still remains that way. And we've run into it, and yeah, these tools work. But this was the projection. So when we put out that thread, you'll see on there 73K. That's the level to look for. And it was on February 28th. So it's pretty close to here. We're trading at this resistance at 52,000. So once we broke the 49K gold pocket, I was like, all right, all-time highs are coming, but don't get too excited, because 73K is still on the table, and still very much so the level. This is the prior cycle before that. Obviously, you could have said, oh, well, we broke above this. Now, game on. It wasn't perfect, but it's decent. It's just one of those things where you can utilize this information. And one thing I'll say is I lean towards log anytime you guys are using tools like this, unless it's like a local scenario. But the reason you lean towards log in this case is because you've gone from 3K to 69K. There's a 22X. The percentage gain on that is so immense that you have to essentially use logarithmic. And if you were to use the halving data, which we are, you can see that the low of this realistically, this projection is from $487 with the high of it coming out to about 8,000. That's a 20x minimum, and price itself did do, from the time this started from about 700 all the way up to 20K. So, I mean, logarithmic's going to be the best choice. And you can see log gets much, much, much more respect on tools like this for that reason, because you're working with an asset that's not trading like the S&P 500 where it goes up like 10% a year and people are happy. This thing's doing multiples in a year still. And so until that changes, linear still is very relevant to day trading and intra time frame trading, like a monthly or maybe even a yearly chart. But realistically on the high time frames, like a cycle, logarithmic's probably your best friend. Just with the amount of data and the amount of percentage change that happens in this asset, you probably want to be using log. So hopefully that makes sense, kind of like a little nugget. I am trading on Blowfin, Javier. There's a link in the bio. I'm a big fan of Blowfin thus far. They've really put forth a solid pitch, and I'll say pitch. And that to me, what the things that they've kind of stood on to me matter the most. Things like not trading customer money, seeing that you can go onto like a blockchain and see that money is still there and not being used, committing to not hunting stop losses, things like that, using third-party market makers. That type of thing I appreciate. Also, they've noted that, with like MEXC, we've had issues with people like, they'll buy low cap gyms, whatever you want to call them, and they explode, and MEXC will halt their trade and keep the money because they'll say that it was abnormal. But in reality, that's bullshit. They should be keeping that money. They've committed to not doing things like that, or like locking accounts. There's no KYC, all the things that I like and I stand for, and I think crypto should stand for, because, the rest of that stuff I don't care for, stopping a trade or trading with user funds or hunting a user stop losses, not specific user, but hunting the masses stop losses, because that's what they do. It's just, it's dirty pool, man. It's dirty pool. If you're doing proper TA, you don't get caught by that stuff too much. But, at the same time, like, I wouldn't want to endorse an exchange where I knew that people could go there and get fucked. They're going to go there and get fucked themselves anyway, a lot of times, because it's a leverage exchange. People go there and gamble, but at least let them have some fun while they're doing it. Don't do it to them. Yeah. Alex said he jumped on Blowfin too. So far so good, man. I haven't been doing it much. When we do live trading in the group, that'll be the exchange that I'm using. So, nothing but good things to say thus far. I wish that their fee schedule was a little more aggressive in terms of things, but that's not the end of the world. I've traded on places that used to give rebates. When I traded on Bybit in 2019, that's when I had left. I think I was trading on Kraken before that, and I wanted some leverage, but I wanted better fee schedules. And Bybit at the time was paying people to open maker positions. You could get a rebate, so you would actually get paid to open positions. Those are like the good old days, wild, wild west, where like you could do anything, and they were trying to capture business from BitMEXco before it went down. And that was great, but those days are long gone. MEXC is pretty aggressive on fee schedule for spot. They're not really as competitive on the perpetual side of things, but a lot of exchanges they're all pretty close. The one that had the best fee schedule was BingX. The problem with BingX was it wasn't so much better that it made them stand apart. It was just a little bit better, but they went full KYC. And so I just don't do that. I know eventually one day I'm going to have to, but I'm trying to avoid it. You know what I mean? So it is what it is there. But, this ended up being a full Bitcoin video. I do owe you guys some altcoins at some point. I don't want to stay on too long. So, here in about 40 minutes, I got to be at a pool party with the kids. It's their cousin's birthday. Went and played some softball with that said cousin today, actually, and my daughter. Great time. So as always, you guys know what I'm going to say. Go outside, spend time with family and friends. Even if you're not outside, spend it with inside. Don't let crypto consume all of your life. I can tell you, for being in the space for going on my third cycle, that it's going to be there on Monday when you get back, and that, you can really benefit from, the relationships you can establish, in real life with family and friends. So always, always, always try to take care of that first. And then take care of yourself too. Make sure you're going outside, getting exercise, eating right. So everybody, thank you guys for watching, and we'll see you guys maybe even tomorrow. I need to get some more videos out. I think the next video that comes out will be an XRP video, so keep an eye out for that either on Sunday or Monday. I'm just going to do a dedicated video to that coin. I've been getting some requests, and I think it's a chart with a ton of history that we need to look at and see where the tradable areas are. I think they're fairly obvious, but yeah. All right, guys, I will catch you guys in the next one. Have a great weekend.